welcome out to Trade Masters, your midweek show for trading picks. And I tell you what, if you missed last week's show, defending champ Tyler Craig, and my cat is so excited for Trade Masters, has ignored me all day long and is like, I got to see what I should make in some extra milk money on. Tyler delivered a handful of winners last week, including the amazing breakout on AMD. Nucor from a cash flow perspective, enjoyed that one as well. Justifying his title. I've already declared Cody the winner this week, though, in pre-production when we were bantering back and forth. But I love Trade Masters where two traders come head to head. And, I judge them, on the quality of the picks, what I think of the analysis, declare a winner at the end. Hurt somebody's feelings, make somebody else's ego go up a little bit. Happy to do that. We got defending champ Tyler. Thank you for those picks last week. How you doing tonight, Tyler?
Listen, the cats are tuning in. They're so friggin' excited for this. I'm gonna make them some milk money. You cats will be very happy.
Listen, you gave a handful of winners in that market doing nothing, right? And you got some directional picks that were winners. That's well done, sir. And Cody, nice to have you back again as the new champion of Trade Masters. How are you doing tonight?
I'm doing fantastic. It's been a long time coming, but I am in the state I grew up in. I'm back in Texas, and I'm so happy about it. I almost forgot the time at which this was because I was thinking, okay, I need to be on Trade Masters at 1 o'clock, and it was like, wait, no, I don't. I woke up this morning for the lounge at 6 a.m. and I was like, all right, let's get going. I was like, nope, I gotta wait 5 more hours.
All right. Well, I'm excited to have you on. Two fine young gentlemen with a lot of expertise that builds every passing year. Very talented. We're going to do 3 rounds tonight. We're going to do a Delta round, which is a directional round, where you make money if the stock moves up or down. We're going to do a Theta round, which is a cash flow is another term for that, where all kinds of goodness can happen. And then we're going to do a final round. I'll give commentary throughout. I'm in a no holds barred mood. So if I don't like you, trade, I still love you. Let's start. Tyler, as defending champ, you get to decide who goes first.
Listen, I'll let the young buck go first. Cody, bring it. Let's see what you got.
That he hates that. Other coaches other traders don't really care. Cody hates it. So psychology games already at play. Cody, Delta.
All right.
What do you got for me from a directional point?
We're going to start. I remember the scene from 21 Jump Street where he couldn't really give a Spanish accent. He said, "My name's Jeff." We're going to go with J-E-F. My name's Jeff.
My name's Jeff. Listen, I love 21 Jump Street. That's up my alley. He's like scoring brownie points already.
So let's start on weekly.
Very excited to declare you the winner tonight, Cody.
Hey, just for the listeners, if you've ever heard the phrase "Don't count your chickens before they hatch," this is a good example of what's going on right here.
All right. So I want to start with the weekly.
Proceed, Cody. Proceed, Cody. The champ will give you the floor. Go ahead, buddy.
I really do like what I'm seeing here on the weekly chart, the nice large high base on the weekly chart with the fact that it is a cheaper stock, $35. So it's kind of a mid-range. It's not like too cheap, but it's in there. So if we were to go to the daily, you can see where it's pressed up against this level a few times, right around 34. It tried to get above it about 3 weeks back, came down off of that. So I think if we were looking just a little bit above 34, I mean, we have the wick at the very beginning. We have the 2 middle wicks after that. So I think we'd have to go a little intraday to find our entry point. But I think around 34.50, we could get in on a very nice entry of a longer term breakout of this stock. And 2 reasons I like this is because if it were cheaper and you want to play just straight stock, it doesn't cost you too much to do so. The other thing is if you were to do a long call on this, so if you go out to the options for me, Tyler, a long call, it doesn't have weeklies, but if you were to go out, say, to December, you can still pick up a long call for this for around $1.90 or $2. And that's slightly out of the money, or we could play in the money. But I think if we get that breakout of 34.50, grabbing the 35 is not a crazy play, which gives you a pretty good risk reward ratio of playing the breakout. We don't have to put the risk way down below the base. We can put it just below the breakout point in order to give us a good risk reward ratio on whether we play this as a stock or as an options play.
All right. So we got a stock, financials, not at all-time highs because you go to the left of the chart, much higher pre-financial crash, but relative, highs for many, many, many years, right? Got some chart in 11, 12. So, I'm looking at it. I normally like multi-week. Why did you choose financials? Because financials have not been leading in the last couple months. Even defensive sectors like healthcare, been holding up. Financials, pulling. And so, like, I get it, like on surface level from a theta standpoint, cash flow is not doing anything. Various cash flow strategies are applied. Why did you choose something in financials for your direction? Was my question for you.
So on that was one of the things that I did look at, because actually some of the bear plays I found were in financials. But this one, with some of the bearishness that we have seen in the financials, this one was just maintaining sideways, showing me that it doesn't necessarily have the overall bearish mentality, and it actually has a little bit of strength behind the company itself. Because sometimes, yeah, the sectors overall can drag just everything down. But sometimes you look for those individual companies that, while everything else being dragged down, they maintain neutral. And that's what I'm seeing here in Jeff. Now, if Jeff doesn't break out, no harm, no foul, we don't get into the trade. But if financials do start moving more towards neutral or even bullish, then Jeff is already set up ahead of some of the other plays in the financial market. That's one of the reasons that I did gravitate towards this individual company.
I mean, there's a touch more relative strength. I'm just going over. I don't follow Jeffrey's. Just going over the earnings right now, it looks very, 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 very solid. A lot of financial companies, though, could say the same. What was Tyler? What was the earnings reaction on Jeffrey's?
Yeah, I mean, so it was your gap up.
It was a gap up. All right.
Yep.
Not all financial companies had that.
Yep.
In fact, not many of them had that. That's
Nope.
Give me a point on that. Would you wait for a trigger, Cody, on XLF itself? Because it has a very tight resistance level it's at right now. Would you wait for it, or are you fine, bucking neutrality in financials before you get involved? Basically, a top-down analyst question.
So you could actually do them simultaneously. So yeah, the top-down analysis, looking at the overall sector, if we were to get a pop there, at a similar time, you might be getting a pop in Jeff. So what I would probably do is I'd set an alert on the overall sector, and I might set up the actual trade on the individual stock. Because if I see the sector actually hitting that breakout and Jeff is not triggering, then I'd probably close the open trade before it triggers, just because it doesn't seem to be following suit with the overall market in that sector. So I'd probably do them in tangent, where I'd set an alert on the breakout of XLF itself, and I'd set my trade as to where I'm comfortable with following my rules for the actual stock itself.
All right, final question for you. Where's your target here on Jeffrey's if you do get a breakout signal? I mean, because there's, you might see a grimace on my face. It has nothing to do with hating any of this. It's just I'm trying to think through it. Wasn't prepared for a directional financial breakout play, so I'm thinking through it.
So Jeffrey's, if you look at it in the past, every time it's moved between $2 and $4. So let's call it $3 move. So I'd be looking somewhere between 38 and 39. If we get upwards of 40, I think it's overstretched. You should have exited before then. But I think 38 from a breakout of 34.50 to 38, I think is a very safe play. If we were to get upwards of 40, then you should have already been out by that point. And that's the reason why I said both a stock play with a cheap risk or an options play as well, because to pick up an option on this is $200. So to pick up $200 and then for it to move, you'd be looking at picking up another, 200 to 300 on that. So you get a 1-to-1 to 1.5% ratio. And then if it were to move beyond that, then you get to that 40 mark. If I were to get to that point, that's when if I were to do the options trade, we were actually talking pre-production with Tyler. My favorite thing to do is actually spread out a trade after the fact. So if I were to buy the 35 call option and then it moves up, I'd be looking to sell the option just behind it at that 37.5 in order to spread out, decrease my risk for the move after the fact.
Any final thoughts, Tyler?
No.
Nothing to add, just to glorify my trade here.
I will say bonus points for your sweet sauce background.
Thank you.
All right, Cody. I'm lukewarm on it. I'll be honest. I'm a little lukewarm. I don't hate it. I have to think through. I would love if financials was showing any life to it. I probably would like it more because I like me a multi-month, consolidation pattern. It's one of my favorite patterns, so that draws me in. I'll give this a deeper look tonight. All right, Tyler, what do you got for us?
All right, so for my Delta play, I'm taking a look at something in the tech sector. Okay, so we'll go top down. XLK looking pretty here, looking pretty. I like the little high base. Tech's been a leading sector.
Is that the 20-day moving average, the red line?
It is the 20 MA. Yeah. I love the move yesterday. Love the relative strength today too. NASDAQ held up firm. What didn't hold up today was, well, a bunch of other crap. So leading sector. And I'm always a fan of finding companies that had really good responses to earnings. Kind of like the point you made on Jefferies, where Jefferies had a positive response to earnings. I just like that in the context of an overall uptrend, right? Something that's got some momentum. And I'm all about finding secondary patterns after the earnings move. So oftentimes you'll get a stock that rips 10, 15, 20% on earnings. Tough to chase on the first move there. But in the week to 2 to 3 weeks after that jump, you almost always get some kind of secondary setup, a bull retracement, a bull flag, a breakout, something like that. Which is a long introduction to my pick on Snap, SNAP. You can see right here is the earnings announcement. You see the monster move higher on Epic volume, which tells you they loved the numbers.
If you had a 9 EMA, you might really sell this pick on your chart.
Well, what does it tell you about my confidence level that I didn't even need to rely on the 9 EMA? I'll throw it up there for kicks, though. I'll throw it up there. Let's see. There you go.
Throwing that up there, I'll let you know you scooped my wild card. Good job, Tyler.
Yeah, well, look, I mean, great minds think alike. I'll say something nice. Great minds think alike there, Cody. Why don't you go hunt for another wild card while I break this down? What do you say? So I love the move on earnings. This was up like 23.8% on the earnings move. That was also a record high. There's the monthly chart. Let me actually pull it back to weekly. So the weekly chart blasted through long-term resistance. Lovely little breakout there. And you can see since that breakout, 2 weeks of a little bit of a pause, a little bit of a pullback on the weekly time frame. I don't know. It looks like a bull flag on the daily. On the weekly, I just like how it's hugging the top of the bar, right? You don't want to see it get back 50%, 60, 70% of the move. It's barely given back any. And I just like this nice, easy, low volume kind of pullback here. Let the 9 EMA catch up and you're finding support in that area. Also, this is the prior resistance area. Becoming new support gives you some good opportunities as well. I liked it yesterday, like it even more today because you got your confirmation. This thing was up almost 5%, one of the best stocks on my watch list. I think this thing wants higher. You got the fundamentals, you got the technicals. I think it's going to go to a new high here. And so want to build an option strategy on it. I think it's a good directional play. Implied volatility is low. You got cheap options. So that's supportive of a long call or bull call spread. I'm going to go the bull call spread route. And I was looking at buying an October 80 call and selling an 85. I think it can get to 85 in the next 2 months, particularly given its history.
Will you price me a wider spread as well?
I will. So I like going to October just to give us a little more time, 72 days out. Buying the first strike out of the money, as I said, the 80 strike. And then the 85, we'll take a look at that one first. So one of the reasons why I don't mind going with just a $5 wide here is because it's so darn cheap. You're paying $1.65 to make $3.35. I already have the potential to make a 200% return on a $5 wide. Oftentimes the motivation for going wider is you want like more upside, right? More dollar gain, but it's not very often that you can get risking 165 to make 335 on a $5 wide. But whatever you want, Mark, I'm here to serve, buddy. You want a $10 spread, buy the 85, sell the 95. You're paying $2. That's actually pretty sexy. You increase the cost by 35 cents. You increase the cost by 35 cents and you increase the reward potential by $5. You've sold me, man. I like both of them,
I
but
thought it
that
might
$10 is pretty impressive. So yeah, so if you want to go for the jugular, the $10 wide gives you a really good risk reward. Risking 2 to make 8. Not bad, not bad.
Can I see the risk graph?
And say again.
Can I see the risk graph?
Which one?
On the second one on March.
Hang on. Back up. I was getting excited. I'm sorry. This is not apples to apples. I did not mean to do 85.95. I meant to do 80.90 is what I meant to do. Okay, still sexy, maybe not as sexy.
Still sexy.
Yep, 284 for a $10 spread. That's a little more apples to apples. Okay, Cody, now which one did you want to see?
Actually, I would love to see them both if we could.
Sure. So here's the $5 wide. Let me take a couple things off. All right, so you got a $5 wide spread here. And I mean, so again, your risk is 165. If it hits 85 immediately, you're up about $90, which is about a 70% return. Obviously at expiration, 335. So net delta on the $5 wide is a 10. So it's a 10 net delta, not as beefy of a trade as a $10 spread. On the $10 wide, your net delta is 20. And you got obviously a lot more upside. So, and they're both cheap enough here, Mark, where you don't really need a stop loss. You could probably size to max loss here if you wanted to, and give it some room.
Yeah, there are so many things I like. Somebody brought up this setup developing Friday on the closing bell show I do for tackle trading, and wasn't on my radar. Is not a stock I normally follow, and I was just like, I loved it. I absolutely loved it. And I was like, there is some beautiful things. I love the gradual sell-off. I love the rising 9. And there's a different element that transcends the chart I like about this. If you go out there to the market right now and you go look at charts and you go look at 5,000 different charts, you're going to find a lot of ugly ones. And you're going to find a particular amount of ugly ones in those high volatility, sexy names, if you will.
Yep.
Snap, sexy name. Money tends in the market, it's a funny thing. Makes perfect sense though. Trading money tends to follow success, right? And while a cash flow trader like me might love the pattern on Palantir, or might love the pattern on ChargePoint, or might love the pattern on Lucid Motors, that's not where most traders are these days. Those new generations, especially the ones that will jack up option prices, they want to chase momentum. That's who they are. God bless them. No judgment at all. You got few patterns. You got the same amount of money with fewer patterns to chase. Makes a pattern and an opportunity like this stand up. Like the pattern, like the continuation. I like this pattern so much I went back and studied bold flaggish patterns on a lot of sexy name stocks. They have a tendency to continue through. I love this trade. I absolutely love this trade. I love the setup. I wish you would have got in today, but we're doing a Wednesday night show, not a Wednesday morning show. I still think there's juice here. I think there's a lot going for it. Cody, what do you think about this trade?
I love it.
Besides the fact that you got it's, hey, here's a lesson. When you go first, you can pick really good trade ideas like Snap and just hammer the ball in the Delta directional round, because this ain't the Theta boring round. This is the Delta directional round.
Yep.
Yeah.
Can I say what? Sorry, Cody, go ahead. And I got one thing.
Oh, no, I was just agreeing with Mark. Go ahead, Tyler.
Well, I was going to say, Mark, I mean, speaking of wishing you knew this before today, I will say on Team Phoenix, we've been stalking Snaps since the gap 2 weeks ago. So we've been stalking this like a leopard.
Sometimes you got to, right? Patience pays off in waiting for setups that you want. It's a good setup. It's a good get. Now, Cody, we're at the round one, and I hear you, young man, have some jokes you might have brought us.
I did bring a few jokes, so let me start off with this one. Husband, wife turns to husband. She's had an old car for many years, and she says, "It's time I get a new car." And he tries to tell her, like, you don't need a car. And she's like, let me put it this way. If I don't have a brand new, very nice car, something that goes from 0 to 150 in less than 10 seconds in the driveway tomorrow morning, we're getting divorced. Husband goes to work the next day, and she's getting a little upset. And he comes home and he walks in the door. He's like, honey, I got a gift for you in the driveway. And she gets really excited and she goes out there and sure enough, there's a brand new bathroom scale.
That's okay. You told me a funny one pre-production that I can't repeat because we have such fine, outstanding people watching. But all right, listen, round two, theta round, cash flow round. Now, a lot of these rounds, like, sexy setups of multi-month breakouts, like on Jeffries, if it occurs, a momentum trade, in the pattern it is on Snap, these can lead to some price appreciation oftentimes in the short term. We saw that on AMD last week. Theta is a different beast. I'm personally a self-identified theta trader. Love theta, love the boringness of it. And so you don't always have the sexy patterns. Sometimes you do, though, but oftentimes you have some really good opportunities with a variety of strategies. Let's see what they have tonight. Cody, what's your theta pick tonight?
All right, my theta pick tonight is going to be CLF. CLF for a theta pick. I actually really love this pattern because it's practically a Cody special, a little breakout above old highs, retracement back from the breakout. So you could play this as a delta play. But what I like a little bit more than that is the amount of credit that you can get behind this. For a $20 naked put, and I always like to use the monthlies, so going out using the monthlies, you can get around $66 for a naked put at the 20. And $66, when you do that, it looks like Tyler's already been looking at this chart before in the past. Y'all can't see his camera, but he's nodding his head. To pick that up,
Cody, you didn't watch Halftime Report yesterday, did you?
I did not know.
My Queen's Court pick was a naked put on CLF at $20.
All right, then.
Obviously, I like it, but I want to hear your analysis on it.
So my overall analysis on it is with that pullback to the previous breakout, right around $24, a little bit below that. I think that you could play this as an overall delta trade if you wanted to, but being able to pick up $66 and with the credit that it's going to take up is around $100 or $270. So that gives you around a 24% ROI, and that level that it needs to get to at $20 is below multiple levels of resistance. So we have a few, we have the $20 right there. We have above that, we have 21, we have 21, we have 22. We have the 24 that's pushing against now. So it has to get through multiple levels of resistance. It has to get below the 9, the 20, and the 50 to get down to $20, all for a stock that has a gradual uptrend long term. And this is also in the steel industry, which steel's been doing very well recently. So overall, I think that a naked put is a nice, safe, simple naked put strategy for the cash flow, pick up 24% return on investment in a company that if you were to own it, it's in an overall uptrend. So you can own that stock with the overall uptrend and even boomerang it after the fact.
No, there's several things I like about this trade. One, not only does it have to get through the daily resistance and all that, which is a line of defense, right, from a naked put, especially to potentially slow it down. But since I'm going to be in this for a long time, and I normally do long term, I got a couple extra areas of defense. If you give me the weekly chart, I got a very powerful, underrated 20 weekly moving average that has acted as defense every time in this uptrend. Eventually that will give out, I like the chances. I also have the 9 monthly rising to act as a support level underneath. So I got stuff that can stop the short-term fall, and if the drop gets bigger. I don't love chasing Cleveland Cliffs from a directional. I know some people are like, well, it's such a hype. Go look at the last 4 breakouts, right? I mean, quick move. I mean, if you caught it in a couple days, great for you, but you had to have really accurate trade management decisions. That's really tough. That's asking for a level of perfection that we just shouldn't expect out of ourselves as traders, nor is necessary. But I like the volatility play. Tyler broke down top-down analysts in this sector last week. He pointed to still plays, but the area is strong. The area of the market is strong. This thing could just take off, right? Play off the 9, bounce, and have like a little snap reaction, which would clear the naked put as well. Lots of ways to win. And if you get put the shares, I like Cleveland Cliffs as a company. I thought their earnings were justified, and it's an easy boomerang type trade for me. It checks all the boxes for me. Tyler, I know you've been talking in your trading lab, this area of the market as well. We both have, you know, it's
Yeah.
obviously has stood out ever since copper popped a couple of weeks ago. You and I have been, you know, like, this is not a bad area, you know, in a market that's kind of weird to
Yeah.
mess around in. You know.
Well, yeah, and from a trading product perspective, I mean, come on, 2 penny bid-ask spreads.
I know the liquidity's there, right?
You got multiple strikes to choose from too. I mean, you could go down to 18, and ROI down at 18 is not bad either. So I think there's a lot you could do with this pick.
I mean, you could go
well
up and down
done,
the option
Cody.
chain, right? You know, like,
Yeah.
plus it was my exact pick yesterday on Queen's Court.
What are the odds?
To the strike price, it was the exact pick.
Mhm.
But like, listen, you wanted to go a little higher, get more credit, be more aggressive. You want to go lower, be more conservative, and just make it a trade. There's all kinds of things you can do on a company. You know, and the one thing you learn in trading is that when a company is treating you well, it is not hard to go back to the well. And Clean Cliff's been treating people who tackle trading well all year long, going into last year. You know, keep riding a winner, producing good trades. And if you eventually get stuck, you know, I don't think valuation's terrible here, right? With, you know, with some catalysts. So, but man, I'd be surprised if you get stuck. You'd have to have a market turn.
But you can manage yourself out of it. That's the thing, is there's so much premium.
You could, right?
There's so much premium. Yep.
Love the pick. Love the pick. All right. You know, pretty textbook naked put pick, Tyler.
Look, that was tough to beat. Not going to lie. Good comeback, Cody. Good comeback. Had you doubled up on the Jeffries, I don't know that this would have gone 3 rounds. I'd have knocked you out in 2, and we'd have just been see you later. So good recovery. Okay, mine's going to be a little different. I feel like I've been doing just a boatload of naked puts, bull puts, and the like in my trading lab and stuff. So I saw a trade today that I thought was interesting, Mark. Been a long time since I did a bearish leaning cash flow play, but if I were to ever do one, this is the type of setup that I think would be tempting for me. The area of the market that has been out of favor, and I know that you are familiar with this, the reopening plays, not liking this whole Delta variant, not really getting a second set of legs in airlines just yet, casinos, and some of the ride sharing companies. Lyft getting smoked today. Not sure if you saw this, Mark, but ugly
I
downturn.
follow Uber. It doesn't surprise me that Lyft did the same. All right, you know. So,
did Uber have a similar negative sell-off on?
You know, like, it had more of a continuation of the crap that's been going on. But yeah.
You look at the cruise lines. I mean, they're all kind of similar trajectory, right? So you take a look at Lyft at the chart. You say, okay, not a good look. First break of the 200-day moving average since we bottomed last November. Doesn't November seem like so long ago? It wasn't that long ago, and that was when the vaccine came out, right? That was the presidential election. Like, that was the catalyst. Lyft tripled in value, and discovering that maybe too far too fast. Earnings didn't live up to expectations. I like the support break. I like the break of the 200. I like the fact, Mark, that this was an all sell day. How often do you get a candle with virtually no wick in either direction that trades lower, closes at the low of the day? Nobody wanted to touch this thing today. And so I feel like that is going to hang over the stock. I'm willing to bet this isn't going to quickly recover and go back up to 60 or break above the 50-day moving average. So if I can sell a bear call spread, if I can sell like a 57.50 call and buy like a 62.50, do a little $5 bear call spread up here and get a 10% return, I'm interested. I think that's an interesting way of setting yourself up for neutral to bearish price action for Lyft. So the numbers got progressively worse throughout the day just because it kept selling off. I still think you could map something out though. So the 57.50 call, you could sell that. You could buy the 62.50. I wouldn't do it unless I could get 50 cents, just need a penny more. So any kind of uptick tomorrow, you should be able to get filled. But little 11% return on a $5 wide bear call on a stock that's out of favor and just got smushed on earnings.
All right. this is probably a winner. And here's my big hesitation. It has to do with anything virus related. This has been my #1 area of trading focus the last 16 months. I probably know as much as anyone on planet Earth about price behavior. I remember so many people coming to me in December, hey, I got a bear call spread on this. I got a bear call spread on this reopening. And prices shot up like 28% on everything, right? Like post-vaccine, like Cinemark, this and that. I worry about Delta news, right? That, maybe we have this like huge drop off on cases and all of a sudden you get whatever. Now that wouldn't prevent me, because, bad things can always happen, right? That wouldn't necessarily prevent me from making the trade. I would want a contingency plan, some kind of bear stop out candle that helps me cut my losses short. What would that look like? Because hey, listen, you might place the trade tomorrow and it might just go down $10. It's a beautiful pattern for a bear call spread in this situation. It's textbook beautiful, love it. Might go $10, might have to worry about it. But what if I get that bear stop out? What kind of candle would I look that would want you to pull the trigger early if you get in and all of a sudden, I got that? What would that look like?
I'll give you two. I mean, and first of all, even if Cody, myself, Mark, even if I don't explicitly spend 5 minutes telling you about what do I do if I'm wrong, rest assured there is an exit plan if we're wrong on all these types of trades, unless I explicitly say so, right? So like in the case of the bull call on Snap, trade's cheap enough, you don't even need a stop loss. You would need an exit plan on this because your risk reward is too asymmetric.
And that's why I bring up the point particularly.
Yeah. So, okay, so you have two choices in my mind. I think if you wanted a tighter stop, and I'm not talking too tight. Don't do a bear call if you're going to have a super tight stop. Do something else. But the tightest I would go, Mark, is how about getting above today's high? If you can completely recover the boot stomping you just suffered, and it gets above today's high and negates this downturn, I might be a little nervous with that bear call up there. So I'm going to say today's high also gets you back above the 90 MA. That would be the first level. And then the second level would just be if we hit 57.50, which is effectively breaking above the pivot high. You want to use either one of those as your stop out point. You have my blessing.
All right. One other question. Why not directional? I mean, Snap was so awesome. Nothing was going to be directional, but what about a directional play here? I know we're theta round, but you stall out a day or two, you break.
If it gives me a little bear flag, couple of sideways days, I don't mind it. My hesitation on directional is the simple fact that I don't want to chase this down 11% in a straight
That's
line.
why I preface it. You got to have a couple days.
At that point, I wouldn't mind it. I wouldn't mind it. Nope.
All right, Cody, what do you think?
My one question is, what's the lowest price you take? I'm thinking about a fill rate, because if you want $50, what if we get another big red candle tomorrow? Just happy missing out on the trade entirely? Are you worried about the fill rate at all?
No, you miss it. You miss it. I'm not chasing bear trades in this market. If this opens lower by $1 tomorrow and doesn't sometime throughout the day rally up to get you 50 cents, pass, move on.
Yep, and that's exactly what I just wanted to make sure we pointed out, is that it's a great trade if you can get the 50 cents. But if you can't, do not adjust it. Don't try to force it. Do not try to make the trade work. It makes sense with the numbers at 50 cents, but picking up this trade at 25 cents, it doesn't make sense at all. So I just want to clarify that.
Yeah, I mean, you guys and you're having descending 920s on the chart. There's a lot of things I like about it. I've seen traders get burned on, trying to get cute on bear things. And plus, Cody had my pick.
I didn't realize.
Tyler's still with the lead, though. Cody caught up some ground. Tyler's still with the lead because that snap pattern. I mean, it's gonna be hard to beat that. From my opinion, is the play of the night. Although Cleveland Cliffs, I love from a cash flow perspective. But we're hitting the wild card round. Basically, this is where things are often won and lost, right? Last pick. But before we get into that, I want to hear a joke from you, Cody.
All right. A guy's driving down the road, backcountry road, ditches on either side, and someone swerves into his lane, and he freaks out and he swerves and ends up crashing into the ditch. A lady who happened to be swerving into his lane, she gets out of her car, she rushes over, and the guy's all beaten up and bloody, and she's like, "Oh my God, let me help you." And like pulls him out of the car, and she's like, "Oh, let me take it back to my house. I can really bandage you up." And he's like, "Ma'am, I don't know if my wife would really appreciate that." And she's like, "No, I'm actually a nurse. I can really take care of you." And he's like, "Okay." He gets in the car. They go back to her place, and she bandages him up. And he's like, "Okay, I really need to get going. I need to get back to my wife." And she's like, "No, you're injured." And he's like, I don't know if my wife will want me to stay a while." And with a wink, she says, I don't know if your wife would mind." And he's like, "No, I need to get back to my wife." And she's like, "Where is your wife anyways?" He's like, "Probably still back in the ditch."
All right, let's break down that joke. It failed at the 20 weekly moving average. I was
Oh,
expecting
come
support
on.
to hold.
My favorite part is just I'm just glad we have screens on this. My favorite part is to just watch.
I was
Just
thinking
watch
the
Cody
same
tell
thing.
the story.
I was trying not to laugh
I think Tyler
mid-joke.
and I both enjoy you telling jokes
Yes.
because you have this natural face that is enjoying the process, right?
Yes.
And so you make it, you make it like, I want to like this joke.
Yeah, well, she's still back in the car. He shouldn't have left.
All right, wild card round. Tyler with a little bit of lead heading into the round 3. But anything goes, right? This is where fortunes are won and lost because anything goes, literally anything. I'm excited to see what this is. Cody, last pick.
All right.
Wild card. What do you got?
Well, I had to find it on the fly, so I had 2 different sectors.
Way to give confidence to your pick, sir.
No, I do have confidence because I have a bear pick and I have a bull pick, but I'm gonna stick with the bull pick. So because I mean bears, if they don't go right, then you can really get messed up. So I'll stick with the bull pick. And steel has been very hot lately, so I'm gonna go with Steel Dynamics for my wild card. So STLD. So this follows a similar pattern to my last one, where it's got a multi-week, multi-month consolidation to the upside, and I really like that it's already post earnings. At earnings, it's moved up since then. It's got a little high base above the 50, pushing up against that resistance level, right where Tyler's drawing it, right around 67 cents or so. I think if we were to get a nice move to the upside on Steel Dynamics with what we've seen in the metals market, I think this could be a nice longer term trade.
All right, so how do I play? I mean, what are my options? I mean, because I like the space. Tyler likes the space. We both like the space. What are some variety of ways I can play this?
So the different ways you can play this. So I personally like doing the long call and then spreading it out after the fact. So if I were to look to do a long call on this, if I get a break of that 67, I'd probably look to pick up either the 67.50 or the 65 call option on that. Look around, and we got to go out a little bit. So we probably need to go out to November in order to get enough days out. I always like going 90 plus days. The Delta rule on these type of trades is typically 60 plus, but I've always gone 90 for any of that. So if you were to either buy the 65 or the 70, depending on where you're targeting, I personally would go the 65. You could get into this trade for around $4.30 or so if you were to hit that mid price. If we were to have that upward momentum, then after it's already moved, I would be looking at a target around $70. At that time, if I get to that $70, I would be looking to sell the $70 call against it. So I'd be spreading the trade out after the fact. And when I sell that $70 spread, what I would want is where the 70 strike is right now is at 260, 280. When it gets closer to in the money, it's going to be closer to $4, just like the 65 is. So by spreading it out that way, you'd be able to actually take down the risk of this overall trade and possibly even make it a zero risk trade or a guaranteed profit trade. That's my favorite thing to do, is that when you have these breakouts, they typically increase in their volatility when they happen. So that increases your overall stock or option price, excuse me. And with that, if I could actually sell, let's say I buy this first call option at 450 or 430, and I'm able to sell the 70 after the move at say $5, I've not only made it a zero risk trade, I've made it a guaranteed profit trade around $70.
And you personally love it. I've heard you over the years, you love that type of trading, right?
Absolutely. That is my favorite thing to do. And when it comes to breakouts or breakout retracements, that's the way I mainly trade them, is I start with the call option. And now, yes,
it's pretty effective. It is. I mean, it's pretty effective.
The ideal thing is to spread it out in the end, but anytime I've taught this to students, I always make sure to caveat and say, you still have to treat the original long call with all the rules of the original long call. If it starts going against you or something goes wrong, you have to exit the trade. You can't just spread it out at any time. The purpose of spreading it out after the fact versus just doing a bull call spread is to decrease that overall risk when the stock moves. And by doing so, you can make a guaranteed profit trade, which is very rare in the market. What other types of trade strategy do you have a guaranteed profit trade? Almost nowhere. And even this trade is not guaranteed profit until you can sell that next call afterwards. So treat it like a long call to begin with, target 70, at 70, sell the 70 call option. And then from there, you've locked in some profit or decreased your risk, and you can let it ride. Afterwards, you've gotten all your margin back. So you can now take that margin and place it in any other trade afterwards.
If you want to hear Cody talk more about this particular strategy or anything else, Cody hosts the Traders Lounge every Wednesday morning at Tackle Trading. Wednesday morning, he's always there. 11 a.m. Eastern. Market gets open. We open up Traders Lounge for all questions.
Tyler, what are your thoughts on spreading out trades like this?
Yeah, so I would refer to this as legging into a bull call spread. Anytime I have a long call, that is a legitimate adjustment technique. So it's a no-brainer for me to roll a long call into a bull call when I can get it to risk-free or drastically reduce the risk. The hard part of that for me, Cody, is having the gumption to buy the call in the first place. It's hard for me to buy calls. If I bought calls more often, I would do that adjustment all the time. So I think that's always in play on a long call, but that's the stumbling block for me, Cody, is having enough confidence to just straight buy the call from the get-go.
Okay, no, fair enough. And typically when I buy my calls, I'm not like, I would not do this on, say, an Amazon. Like I don't go out when the call itself has more risk than I can tolerate. But for a $50 to $100 stock, the calls aren't that unreasonable, and I'm still going to manage it where my stop is going to be if it breaks back below that point. My max risk is around, $1, $2 or so, which is within my pain threshold.
Yep. I like it. Let me hear your joke before Tyler goes.
All right. This one's a little bit more on the fun side. What does a
as opposed to your previous two jokes, which were the unfun side?
What does
I love teasing Cody. It's one of my favorite things in life.
That it is. What does a push-up bra and a bag of chips have in common?
Look at his face. He's just so proud of this joke. What does a push-up bra and a bag of chips have in common?
When you open them, you realize they're half empty.
Oh, okay. I'm getting it.
Tyler got it.
Tyler got it.
Never mind. Okay, move on.
All right, Tyler, wild card round.
Okay.
You can approach this.
Listen, I'm doubling down on AMD. That's how I'm going to approach this.
Oh my goodness. Snapping victory from the jaws of defeat.
No. Follow along. Way. Follow along, friends. Follow along.
All right. Here's what Tyler nailed the breakout last week. Breakout, awesome trade. You're going to have a hard time finding a better performance based on a technical setup than this one had in the entire market. So well done last week. And so I'm fascinated that you're bringing it back after a blow off top.
I am. Okay, here's the deal. You obviously would not go bullish here unless you're like super duper short term, right? Like the train has left the station. It's almost at its destination. Like forget
day trader
forget
term.
Yeah, maybe. Yeah, day trader tomorrow, fine. But that's not our ball of wax here tonight. So is there a trade? Well, most people would look at AMD and they'd say, cool off, dude. I'll take the pullback, right? Give me a pullback down to 110, 105, 100. Like I'll play the next dip, right? And at the same time, they would say, I'm also not brave enough to try to pick a top because you're crazy. Maybe you go to 140. I don't know. And so I stay put. I don't do anything. I wait, see if I get another setup. That would be the typical response to this particular setup. Sure. But I think you can make the case for a trade here, and that's going to be my wild card. You got something to say, Mark?
No, I'm fascinated to see where you go with this.
Okay, so here's what I would do. If volatility were low, you couldn't do anything here. I'd say, yep, I agree with you. Wait for the next setup. Because vol went bonkers today and they juiced the price of out of the money calls and puts, I think you can create a fairly compelling trade here. Mark mentioned earlier blow off top. We talked about this pre-show. You're getting to the point on the volume side where this is indicative of a short-term top. I'm not saying it's today, but we're close, dude.
Yeah,
we're close.
no, it feels it, right?
Yes. And the reason you get the volume climax is it's as if everybody's throwing in the money at the same time. It's like, who's left to buy, dude? I'm pretty sure all of America just bought AMD. Like everybody bought. Okay. And so who's left to buy? Nobody. So it pauses or pulls back.
Well, and it goes to, Tyler, that thing we were talking with Snap was so, go look at Lyft, go look at so many charts, go look, they're all crap.
Yep.
Fewer patterns, fewer momentum, same amount of dollars, same amount of traders. I think that's a pattern you need to watch while you have the breadth in the market that you do right now.
Agreed. So what is the directional opinion here? Well, let me draw the line. I'll tell you what I think is going to happen and what this trade is based around. I think if this pulls back, the dip gets bought, right? Like, I don't think this is going below 100. I think this breakout was legit for every reason that you could think a breakout's legit. It went up a gajillion% afterwards. It had monster volume. It's been above 100 now for 5 straight days, and it'll probably make it, 10 or 20 straight days. I think a dip is getting bought. So my opinion is if it dips, I think it bounces before you get to 100. Number one. Number two, if this wants to continue partying, I think there's a comeuppance sooner than later. I don't think this goes straight to 150. I think maybe it gets to 130, maybe 140, and then it's cooked and you're going to see the comeuppance or the pullback, right? So I don't know which path it's going to take. I just think that in a week or 2 or 3, I would not be surprised if this stock is between $100 and $140 or $95 and $145. I think that's very possible, highly likely.
Especially based on everything you just said. That's a reasonable proposition.
So the question is, can I get paid to put my money where my mouth is? Like, will you pay me a decent amount of money to take that bet? Because I think there's pretty good odds that's what we're going to see. And the high implied volatility, this volatility spike tells you they are running after probably out of the money calls primarily, but the IV ramp will juice up out of the money calls and out of the money puts. So I'm thinking iron condor. If you're going to let me sell a bull put at 95.90 and sell a bear call at 145, 150 or 150, 155 and get a 20% return, look, I'm tempted. Okay. I'm tempted. So let's see what we can get. I'm going to go to September, 44 days out. I'm going to see where the out of the money puts are. And I could sell a 95. This is an 11 delta, a 95.90 for 54 cents. Okay. For 54 cents. Well, look, if I don't think it's going to go back below 100, I could straight up just do the bull put and get my 11% return. If you don't want to step in front of the freight train and do the bear call, I think just the bull put's fine. But I'm not a scaredy cat, Mark. I think based on today's movement, I think we're close. And so I will sell a bear call and they'll let me go far enough out of the money. They have a pretty good margin of error.
Yeah, they jack those calls up in this.
Yeah, forget 140, forget 145, Mark. I'm pretty sure I can go to like 160, 165 and make this interesting. But I'll settle with 155, 160. 35 cents. I want a little more. 150, 155, good enough. Okay. So 150 on the top side, 95 on the downside. Let's draw that real quick. So they're going to let me build a profit range that is 150 to 95. I think there's pretty good odds it's in this box in 44 days. But here's the other thing. The risk reward is pretty compelling. If I'm getting $1 for a $5 condor, look at the risk if I'm wrong. Because I could be wrong. Let's say we bail if we hit the 95. You're out about $130. Let's say I bail at 150. You're out about 90 bucks. Your risk reward's 1-to-1. Have a high probability iron condor with a 1-to-1 risk reward. Why not take the trade?
This was building momentum for me. And then you just crossed the momentum and you sold me on the trade management aspects. Because I was like, listen, I got a little gamble in me. I bought your logic, right? You know, I base things on technicals. I bought your logic. I bought your analysis. Made sense to me. But the only question was, you know, like, how am I going to manage this bad boy? Because in my head, I was like, I'm just tempted to just let it ride no matter what. But you gave me a compelling, like, get out point. This is what I could expect to lose. That puts risk reward at about an even kill if price dramatically moves in one direction or another.
Yeah.
I like that.
And your probability, 11 delta on one side, 18 on the other. So 19 and 10, 29%. So you're like 70% probability of profit, 30% probability of loss. Normally when your odds are that good, you're going to be risking $2 to make a buck, right? They're giving you even. Risk one, make one, 70% odds.
Give me even money on that.
Yeah.
Now I might just sell 2 bull puts and call it, you know, the Mark Iron bull put condor.
Good.
I like it. Listen, I might, you know, I didn't think there was any chance in the world I'd follow along with this trade tomorrow. Now I'm going to give it some thought tomorrow. Cody, I saw you nodding your head a few times. What do you think?
I love it because I was thinking the same thing because Tyler even called a shot in the prep for the show. He said, I'm going to drop an iron condor on AMD. And we kind of said like,
oh, I gave the title to Cody. Cody was like, Cody's going to be the Trade Masters special winner tonight. You know?
You made the joke to be in the show because we were like, how are you going to pull this off? But Tyler, I mean, being the architect he is.
And the thing is, and I talked about this in my trading lab a few weeks ago when Spike had its big move up. The thing I love about volatility spikes, and the funny thing is, historically, and my cat is really excited. I'm going to do the trade for sure now. She needs some milk money. Is that, you know, we're so used to volatility picking up on the downside, and that still exists, right? Lift goes down, delta goes down, volatility. But some of the weirdest spikes in volatility over the last 15 months have been on upside moves.
Yep.
Where it impacts the entire option chain. And so when you get an upside move like this, I mean, I can go out and get a good credit at 95 bucks in September if I just wanted to sell a naked put, get good credit way down below. Upside moves, especially in the midst of them, those market makers jack up the entire option chain in order to put pressure on call buyers, right? Because people aren't necessarily buying shares. A lot of people are. Look at the volume. But they want to prevent GameStop situations from happening again, where a stock goes from 100 to a billion in like 5 days, right? And so they jack up those premiums, but increasing the premiums impacts the entire option chain, which can make some very creative plays for individuals that recognize on the volatility spike. Listen, let's not follow the crowd and be, you know, chase the dragon and just, hey, this to the moon, right? No, let's find ways to make money that in a creative way using volatility to our knowledge. I ended up loving the pick.
That's what you get for counting your chickens, buddy.
Dude, that's what I get for being wise enough to know to keep an open mind.
That's right, Mark. Well done.
Cody, that lovable face so makes me want to declare you the winner. You know, listen, Snap, I love that pick. I mean, I don't love it as much as AMD last week, but I love it a lot. I think, you know, money gravitates to success in this market in the short term, and that's what it was, short-term directional trade. Love that Snap pick. Curious, give me something to think about while I'm having an adult beverage tonight on this AMD, how I want to play it. But I like the volatility spike play. And Cody, I love Cleveland Cliffs. You know, I like that. I actually like Jeffries from some cash flow aspect. I do like that it bucked the financial trend and gapped up on earnings. That's going to give me something to think about. Don't know if I'm going to look for a directional play, but that made it stand out for me personally. But Cody, I want you back on more and more. I just like looking at that face. Like, if you weren't married, if you weren't happily married, I'd be pitching you to the single ladies out there, but you're happily married because someone else looked at that face and said, yeah, that one's for me. Cody, thanks for showing up. Tyler, you get the last word as the champ.
Yeah, Tyler definitely took this one tonight. Tyler.
Go ahead.
No, I did a little bow down too.
Oh, okay. I didn't know if there was a thought there. Look, you did good, Cody. I appreciate you coming out, man. Dig the background, and I was digging the jokes. So, yeah, good stuff, dude.
Hey, don't get used to that title. Don't get used to it.
Listen,
See, that nice, complimentary, but still confident. I love it. Seriously, I love it. Everyone, I love you all too. Tackle Trading, amazing community. If you want to see what this amazing community is, it's not just awesome people like Cody and Tyler. It is hundreds and hundreds and hundreds of awesome individuals that are part of the community, strong, motivated. You are who you surround yourself with. I believe that in life. Surround yourself with winning mindsets on people that want to achieve financial success and are very nice and polite in their process of doing it. That's what sums up our community. Awesome people driven for success that are awesome. Sign up for a free 15-day trial. Store tab, tackletrading.com. We have coach mastermind group, Greg Holmes tonight in 30 minutes. Check that out if you're a pro member. Everyone have a wonderful, wonderful evening.